the bulls are back. Are they back to stay?
Well, we hope so. We've seen a rising trend over the past few days, and we believe that with the elections behind us now, there's a lot more confidence in the economy, and we finally started seeing the FDI flows that we've been expecting for a while now.
All right, talk to us about what's happening on the forex market side. I mean, we're seeing the naira coming in quite weak at 157 naira to the dollar. What are the variables at play?
Well, for now, we thought we'd have seen some strengthening by now, but actually, yes, the naira has still been under pressure. Even though there's been supply from the oil majors and there's been supply from the central bank, we've still seen some level of devaluation post-election. What we expect to see is that the naira should firm up. It should firm up in both segments. The FDI inflows, as far as we know, have started coming in.
Yeah.
We're getting interest in our securities markets. We're getting a little bit of interest in the equity markets as well, because there's some good value stocks for investors. So we expect to see, maybe from next week, the week after, there should be some kind of turnaround in for the naira, maybe to pick up 40 cup or 50 cup, or that's what we're thinking.
You know, in the context of those optimistic views, though, Kubi, the Central Bank of Nigeria is still very worried about the bearing that inflation is going to have on the currency, and there have been tacit suggestions that we need to see a lot more by way of monetary policy tightening. Ahead of the Monetary Policy Committee meeting, what do you think the stance is going to be?
We might see the rates being maintained. The reason being, the reason being, just before the elections, we saw 100% basis points increase for the MPR rate and for the, for the lending and borrowing, and that had a knock-on effect on the rest of the economy. What that has led to now is that manufacturers and the private sector are beginning to complain a little bit that lending rates are high and it's affecting business. And if you listen to what the central bank governor has said in the past week or so, it shows that he wants to bring lending to the real sector back into single digits. So they will have to balance between inflation, keeping inflation in check, keeping the currency at the levels they would like to see it, and then at the same time trying to keep a hold on inflation. However, inflationary pressures should be down a bit now. We're post-election, the big spending, most of the big spending has been done. So for the rest of the year, it should be normal. It should be a bit more of business as usual. So there should be less inflationary pressures in the next month.
Obviously, you've been referring to the fact that there's been an improvement in foreign direct investment into the economy. And of course, that's also as a result of some clarity as to the outcomes of the elections. But what are you expecting going forward? You know, the one interesting phenomenon is that Nigeria and South Africa are the leading economies in Africa, but they're also the two economies where there have been significant declines in FDI.
Well, the declines in FDI were expected. First of all, we took the turmoil a couple of years ago, and of course a lot of foreign investors pulled back. But right now, with yields the way they are across Western Europe, you're seeing 2–3%, and there are problems there. Whereas Nigeria still represents returns of 8, 9, 10% against a currency that has been fairly stable. We've actually been able to get through an election and keep the currency stable. So now that we expect things to be smoother, it's not likely that the currency will lose a lot of ground. We've been seeing that interest, and we think that interest is going to be sustained because the returns are pretty good compared to what you can get elsewhere.
Comparatively speaking, Kubi, FDI as tangible investments and portfolio inflows into the stock market, where are we seeing, or what sort of trends are we seeing rather?
We're seeing some into the stock market, yes, and we're also seeing into securities. And yes, they can be a bit destabilizing, but at least you know that they'll be with you throughout the rest of the year, because there's a 1-year limit on how soon you can go out of securities. So with that in mind, then it means that at least we're not going to be seeing the outflows anytime soon. That should keep us stable to the end of 2011. And then of course we have the high oil prices. We've been able to accrue $1 billion in the past 1 week to our foreign reserves. So all those give support to the currency.
All right, comparatively speaking, in terms of those flows, do people prefer to invest in Nigerian companies' equities, or are they looking at bonds? And if it's bonds, just give us a sense of what you expect for the yield curves.
Well, it's both. We're seeing interest in the equities, but that might be a bit tempered by the fact that stock market has been volatile, and the growth we haven't seen, it hasn't performed too well. If you compare it with the top performing buses, it hasn't done too well comparatively. However, for the bonds, yes, there's been a lot of interest in the bonds, and we're seeing it reflected in the secondary market. Yields have dropped significantly, both for the bonds and for the treasury bills. We're seeing treasury bills up to 1 year, 91 days to 1 year, 170 points of what they were at the primary markets, which is a significant decline, and it's a reflection of the amount of interest that there is in those segments at the moment.